Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 19th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of Twitter or X. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. And we really appreciate those of you that click like and repost on this Market Outlook related content. Last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and take a look at what happened in the markets here today with our daily recap. You can see I've got the S&P 500 heat map pulled up in front of us, and you can see an ocean of green in front of you. My oh my, another impressive day for the market. Seems like that has been a constant theme for about a month and a half at this point. In fact, the Russell 2000 is up 12% just this month, and both the Dow and the NASDAQ have a 9-day winning streak that they are in the midst of right now. That is not normal. And so very little in the way of give back. And even those indices that have had a rare day of selling here or there, it really hasn't been too aggressive. Some of you might have seen my post on Twitter yesterday where I mentioned that we were in the midst of a 36-day period where we haven't even had a 1% pullback in the S&P 500. I guess today would make it 37 days. And that was second only to a stretch of time in June and July of this year where it was a bit longer than that. But this trajectory, this percentage that we've seen higher during this 37-day stretch without a 1% pullback has been an even more aggressive upward tilt than that, I think it was 46-day span that we had back in the summer. We were up like, I think 10% or something like that back in the summer during that time period, and we're up like 14% during this particular one that's a little bit shorter in length, but more potent in terms of its bullishness to the upside. So it has been a remarkable rally. The persistence of the bullishness has been breathtaking, especially knowing that traditionally we have a fairly strong end to most calendar years with the Santa Claus rally and bullishness in the holiday season and all that kind of stuff. So if we have a massive bullish move before that and we get that on top of the bullish move, that is really going to drive the short sellers crazy. So it's been quite interesting to say the least. We talked about that whole process quite a bit in my dividend growth investing class today, where we wrapped up this semester's portfolio, talked about the transition from being quite bearish at the beginning of that portfolio to being really bullish at the end of the portfolio, and seeing all the double-digit winners that we had based upon our willingness to buy stocks when they were out of favor just a few short months ago. And so for those of you that did commit to the long term, congratulations. You're getting rewarded with that, at least at the moment. We'll see, of course, what 2024 brings. But so far, so good. It has been quite a robust rally. Let's go through some of the movers here today, starting with the Magnificent Seven, as we typically do. Apple was up today about 0.5%. Microsoft was up 0.16%, so pretty standard days there, nothing too dramatic. We did have Alphabet with a slightly better performance today, up about 0.2%. Meta did even better than that. Meta's back to new highs, at least 52-week highs, up 1.67%. We also saw that Amazon managed to close just a touch lower at a minus 0.18%. And then Tesla had a very nice 2% move here today. So Tesla was the biggest mover of that batch. And then last but not least, NVIDIA was down about 1% today. Now, as mentioned here in this presentation last week, don't forget about Broadcom. Broadcom, all of a sudden, just out of nowhere, it kind of feels like, at least to me, is a very important company, market cap-wise, here in the S&P 500. All of a sudden, it is over a $500 billion company. It was down 0.65% today, but I think that's a name that a lot of people, at least on Main Street, are not all that familiar with, right? People are familiar with, let's say, how about United Healthcare, which is nearly a $500 billion company. So Broadcom is bigger than United Healthcare. A lot of people, of course, are familiar with Warren Buffett's Berkshire Hathaway, right? So there's a number of companies that are in that kind of market cap range that the average person, even if they're not associated with the stock market, will be aware of because of just their consumerism. So like Berkshire Hathaway, $700 billion, Visa, $500 billion. But I don't think the average person on the street could tell you much in the way of what Broadcom does. And yet we're looking at a $500 billion company here all of a sudden. That has been a favorite of ours in our dividend growth investing class over the years. So we're happy to see it go up at such a healthy pace. But today, like NVIDIA, it kind of sat in the backseat and let some of the other areas of the market motor on higher. In terms of any patches of red that were out there, in terms of any patterns or consistencies, there really wasn't much. I would say there's probably a little bit more selling in the consumer staples space here today. Coca-Cola, Pepsi were both down. Costco was down. Procter & Gamble was flat. So you had a little bit of selling there, but again, nothing aggressive, right? That is just kind of average days, nothing dramatic or anything like that. In other areas where we had a little bit more red, you could probably say that software was down a bit here with IBM, Cisco, Accenture, Arista Network. Some of those types of technology-related companies were struggling a little bit more here today. And the IT services, I guess would be a better way to phrase that, not really software, but IT services area. So that was an area that was a little bit out of favor here today. You had some of the industrials out of favor, and that was in the normal session, so like automatic data processing, Equifax, Cintas, Waste Management, Republic Services. They were down here today. FedEx was down during the normal session by 0.68%, but they're getting walloped after hours here tonight. Last I checked, they were down about 9 or 10%. They are one of the stragglers in terms of earnings reports, and so they did report their earnings here this afternoon, and market's not really treating that particularly well at the moment, and so UPS is down with them in sympathy in the after-hours session there as well. You can see that alongside of Amazon, you also had Airbnb, Marriott, and that were down. McDonald's was basically break even. Recently passed my 10-year anniversary of holding McDonald's in my Roth. We held it in another family account for a longer period of time, but we had a long discussion about the importance of staying in your seat with blue chip dividend growth types of companies in my DGI class earlier today. If you're a premium member, you're welcome to check out the recording on that and get some of my thoughts on that topic. In terms of other areas that excelled here today, we did have Amgen up nicely. It's another nice dividend growth stock that was up 1%. That stock's getting closer to its highs once again. We had Bristol Myers that was up 1.5% today. We had Pfizer that was up 4%. Pfizer has grown their dividend for over a decade at this point, but remember they did cut their dividend back in the 08-09 crisis when they bought Wyeth, and so they don't have as long of a history of increasing the dividend like something like Johnson & Johnson, which, by the way, some of you might have caught my tweet here yesterday about Kenvue and my expectations on whether Kenvue will be a dividend aristocrat or not. So if you didn't catch that, make sure you check my Twitter feed from yesterday because I picked up on some notes that I don't think many people have been talking about out there from another outside source, which leads me to believe one thing over another. I'll leave it at that. I'll let you decide if you want to check that out on my Twitter feed. But Pfizer does not have as long of a dividend history as Johnson & Johnson. Pfizer has been woefully out of favor price-wise this year, one of the worst performers out there, with the surprise coming, that they were one of the poster children of the COVID era and really made a lot of cash flows as a result of the vaccines that they developed for COVID. And here we are on the flip side of that conversation, watching Pfizer just torpedo lower for most of the year. But today had a little bit of a dead cat bounce, up 4% here at the moment. We'll see if they can turn that into anything more substantial moving forward, especially into 2024. Other big movers here today, I would say some of the travel names, like the cruise ships, have had a nice year. Royal Caribbean and Carnival both up here a couple percent today. Some of the casino stocks doing nicely, so Las Vegas Sands up over over 3%, as was MGM. Caesars was up 4% here today, so seemed like that was a bit of a theme. Estee Lauder had a nice day in the makeup space, up 4%. Let's see who this one was over here. Enphase, so that's another one, kind of like Pfizer, that's had a really tough year, but getting a nice little snap back here today, up about 9%. We saw Catalent up 6%. We saw Moderna up 4%, so kind of sharing with the Pfizer theme there with the vaccines all of a sudden making a move today. Illumina making a nice 8% move higher. Some of you might not have caught the news yesterday, but it sounds like they will now be divesting their Grail purchase, and what a circus that whole thing has been for several years at this point, but apparently the market likes what it hears there. All right, let's take a look at some of the more specific breadth numbers now, and as you can see, I've got the S&P 500 pulled up here in front of us, and 400 to the penny, or to the exact number, were higher out of the S&P 500 today. So that's of course pretty easy math. 80% of the index was higher on today's trading. So obviously very strong breadth numbers there as well. Taking a look now at some of the charts, you can see I've got my 4-grid pulled up here for the market forecast indicator, and no surprise, the background colors of all 4 of our charts remain that dark green color, suggesting that we have a strongly bullish intermediate posture on all 4 of these indices. And if you've been watching these videos for any length of time, you should know that that should not be a surprise to you. We have had strongly bullish postures on all of these indices for over a month at this point, which is somewhat rare. Usually you get a little bit more back and forth. You can even see, like earlier this year, you had bearish, bullish, bearish, or down here, bearish, bullish, bearish, bullish, bearish, back and forth they go. So this has been a remarkably consistent bullish move that we have seen here as we head towards the Santa Claus rally and the end of the year. You'll notice that in addition to all 4 of these charts having strongly bullish intermediate postures according to the market forecast, all 4 of them have green 30-day moving averages as well on these charts, which basically suggest we have price above rising 30-day moving averages. Notice that the Russell 2000 was able to join these other 3 charts with that tag here all of a sudden that says yearly high today. Remember, that index really had not been participating on the upside the same way that the others were earlier this year. So this is some new information, and I believe I heard on CNBC earlier this morning that this was one of the fastest moves in the Russell 2000's history, from 52-week low to 52-week high. It basically happened in a month and a half. Normally that is not going to function that way, right? Usually it takes several months. Heck, it could take years from a key low area to get back to a key high area. But in this case, we've gone basically straight up in the small caps here more recently, and they've been working their way higher on the factor selector tool that we use in my factor-based swing trading class. We'll have that discussion tomorrow morning for those of you who are our premium members who gain access to David and I for multiple hours every single trading day. Also notice that in terms of today's performance, the S&P 500 was up 0.59%. The Dow Jones was up 0.68%. And as I mentioned before, we're in the midst of a 9-day win streak for the Dow Jones right now. The NASDAQ was up 0.66%. Similar to the Dow, we are in the midst of a 9-day win streak on the NASDAQ composite, and then the Russell 2000 was today's superstar, up nearly 2%, 1.94% to be exact, to a new 52-week high. They're not quite to all-time highs yet, but at least heading in that direction. And by the way, the S&P 500 is only about 1% away from all-time highs. And remember, that was set the first week of January 2022. So it's going to be interesting if we get up and past that in the next 2 weeks, or whether we will end up going a full 2 years without having an all-time high. But at this point, the way that the markets have been cooking to the upside, I would be a little surprised if we didn't get there by the time that 2-year anniversary rolled over in the next few weeks. Real quick here on the asset class 12 grid, just wanted to show you what's going on with interest rates, because that's really what's driving the story of stocks right now. Interest rates fell yet again, basically sitting down there at 3-month lows. 10-year Treasury yield is at 3.92%, and as you can see, it's been a straight down move in interest rates. We have a strongly bearish posture there. Price is clearly below a falling 30-day moving average as well. You can see the other charts on the board in front of you. We had bullishness not just in the United States, but a strong performance out of the foreign markets today as well. Both the foreign developed and foreign emerging markets both were up 0.85% today, both outperforming the S&P 500. Both of them, as you can see, also have strongly bullish postures above or rising moving averages there as well. All right, that's my 15 minutes, so our time is up. Appreciate you checking out this video. Remember, in order to unlock an hour-long video out of me, I ask one simple request out of you. Take 5 seconds out of your day to click a free button. Click like for me there on Twitter, and we can see if we can get us up and over 100. If not, and you enjoy these quick hitter videos, then continue to not click like. And if we're under 100, we'll continue to do these shorter videos here for you as well. But remember, our premium members always have access to hours worth of content from David and I each trading day. So if you're serious about that in the new year, we would encourage you to sign up for our premium package so that way we can teach you every single day. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.